So we just finished the year of 2019, and I thought it would be a fun idea to take a look at all the different stocks that Warren Buffett purchased during that year, obviously through Berkshire Hathaway, and give my quick kind of rapid fire opinion on each one of them and let you guys know if I'd be willing to actually buy any of them in 2020, either at current prices or if they kind of dip a little, or I'll just kind of let you know if I'm not interested in that particular stock as we go through the list. But really quick disclaimer, I believe Berkshire Hathaway doesn't release their Q4 filings until about another month or so. So we're going to be taking a look at Q1 through Q3, and then I can make an update video whenever Q4 comes out if you guys want me to do that. But anyway, this should still be a really fun video. I hope you guys enjoy this, and if you do, make sure you hit the like button as it really helps the channel survive and grow. But with all that said, let's go ahead and get started. What's up everyone, my name is Ale. Welcome back to my world of stocks. Okay, so the source that I'm going to be using here is going to be the SEC filings from Berkshire Hathaway, and I apologize if I get anything wrong, but I'll do my best to be as accurate as I can. If I do mess anything up, make sure you let me know down in the comment section. But we're going to run through 8 different stocks here that were net buys for Berkshire Hathaway in the year of 2019 so far, Q1 through Q3. And we don't know the exact prices that these stocks were purchased at, so I'll only be able to give you guys the amount of shares that were purchased and in what particular quarter they were purchased in. But these stocks will be in no particular order. We're just going to kind of run through the list and I'll give my opinion as more of a growth and kind of dividend oriented investor myself who invests in stocks for the long term, but I'll be judging these based on today's prices so that you have more kind of an up-to-date view on these different stocks. Okay, let's kick things off with a fun one here, and that's going to be, of course, Amazon, ticker symbol AMZN, which they purchased 483 shares of in Q1 and another 54,000 shares in Q2. And those were probably good times to be buying the stock, as there's been several times in 2019 that the stock was trading for just around $1,600 or even a little bit higher, $1,700 a share, kind of in that price range. And I gotta say, I really like these purchases. Amazon is currently my second largest stock already, which I've owned for many years, and I even added a little to my position in 2019 as well during some of those dips. I'm not currently buying shares though, as they now trade for about $1,900 a share, and their forward P ratio is sky high at over 70, which is close to 300% higher than the sector. But from a long-term perspective, I still think that Amazon is a hold given how much they continue to grow despite already being so massively large. In fact, their annual revenue is pretty close to $300 billion, yet they continue to grow at around 20% a year. That's pretty crazy. But that's also the reason why their valuation is so high, because they've recently started to reinvest their profits again to make sure that they keep growing their business at these high rates, and the side effect of that is lower profitability, which sends the valuation climbing, especially when the stock market in general is breaking new records. But any long-term minded growth investors like myself should really focus on the long-term picture, and that is continuing to dominate the e-commerce market with close to 50% market share here in the United States, the cloud computing market with over 30% market share worldwide, and continue to grow in other areas like digital advertising, where they are even outpacing both Google and Facebook in annual growth. Again, the stock is just a hold for me at these higher levels, as it's already my second largest stock and I'm up over 100% on my position, but any significant dips in 2020 will likely be great buying opportunities in my opinion. By the way, I'm not rich. I buy Amazon using fractional shares over time. I completely understand that the shares are price high, just kind of in the general sense. Okay, next up here we have Restoration Hardware, ticker symbol RH, which they bought over 1.2 million shares of in the third quarter. And just like Amazon, I'm pretty sure Restoration Hardware, they call themselves RH now, by the way, but I'm pretty sure that this is a brand new position for Berkshire Hathaway. But it seems to have been the right move to purchase, as they now trade pretty close to a record high at over $200 a share after having climbed by over 120% in the past 5 years. Now, this is a home furniture and kind of furnishings retailer that mostly targets mid to high income households and also businesses as well, but usually with higher price items, which they sell both online or in physical retail stores and galleries, and also through catalogs. In any case, their sales have been pretty strong lately with expected growth of around 7% or more in each of the next 2 years, while EPS is also expected to climb by nearly 30% a year over the next 5 years. That EPS growth is so high that it actually leaves them with a pretty low valuation even after the recent run-up, as their PEG ratio is only about 0.6. Their PE ratio isn't necessarily as cheap, just kind of in the general sense, but it is still about 16% cheaper than the sector median. So overall, pretty good valuation there. In my opinion, everything about RH looks pretty solid right now, so I can understand why people would want to own this stock, but I suppose a couple negatives would be that they don't pay any dividends and are likely very dependent on the macroeconomy, which makes them a little harder to hold this deep in the economic cycle, especially without any dividends being paid out. Seems like a pretty good stock though, but I'm not very experienced in the luxury home kind of furnishings market, so I wouldn't really know how to value them as a company and against their competitors, so I probably won't be buying anytime soon, but definitely an interesting stock nonetheless. Okay, next up here is Occidental Petroleum, ticker symbol OXY, which they purchased close to 7.5 million shares of in the third quarter. Now, this one is pretty straightforward as oil prices have been struggling in recent years, so this may be kind of a long-term bet on oil prices recovering and climbing higher in the future, which Warren Buffett has kind of alluded to in previous interviews. But as it stands right now, Oxy has been an exception to all of the oil companies that have seen little to no sales growth, as their revenue has actually soared by some pretty gigantic rates over the years. Now, that growth has not come cheap though, as sacrificing profits along with expensive acquisitions like the one that they recently made in Anadarko for a whopping $55 billion, as they were forced to kind of outbid Chevron, have also led to increasing debt, the need to cut costs, which they are now trying to do through significant layoffs, and analysts just aren't really convinced of all of these moves being effective enough, as their EPS is estimated to drop by close to 20% on average over the next 5 years. And despite the stock having already crashed by over 40% in the past 5 years, the shrinking profitability has still left them with a very rich valuation. Now, their forward P ratio is over 44, while their PEG ratio is actually negative. It also leaves them trading over 200% higher than the sector, which is obviously very bad. Now, they do, however, pay a very nice dividend that yields almost 7%, so that is very attractive, and it also comes with 17 years of consecutive growth, but the super high payout ratio of over 160%, coupled with the shrinking profits, leaves me feeling a little worried about its sustainability. Not really a stock that I'm interested in myself, and I have to admit that I'm a little surprised that Berkshire is betting so heavily on them, but I guess we'll just have to see how this plays out in the future. Okay, next up here is Bank of America, ticker symbol BAC, and they purchased over 31 million shares of them in the third quarter, and this one makes a lot of sense as it's already one of their largest holdings, and of course Warren Buffett really loves to invest in bank stocks. One obvious reason for that is likely due to the attractive dividends that banks usually pay, as BAC is currently yielding over 2% with a pretty low payout ratio of just 25% and a monstrous 5-year growth rate of over 40%. That is pretty high. So this definitely has potential to be kind of an attractive dividend growth stock. On top of that, the stock price itself has performed pretty well in recent history, climbing by over 100% in the past 5 years to new record highs. But even despite the climb, their valuation is still pretty reasonable, as they trade around 10% cheaper than the sector median on both a forward PE and PEG ratio basis. That's probably because Wall Street doesn't want to pay a premium for a company that has pretty much plateaued here, with little to no revenue growth in both 2019 and 2020, although their EPS growth still looks pretty healthy overall. So when you couple that with the reasonable valuation and the attractive dividend, I can understand why Berkshire Hathaway would want to invest in the company. It's not really a stock that I'm interested in myself, as JP Morgan Chase is the only bank stock that I've ever owned personally, and my knowledge of the banking industry is very limited, which is why I've kind of stuck with JPM, as I feel that they're kind of more reliable and one of the best run banks in the entire country and in the entire world as well. But again, I can understand why Buffett or anyone else would like BAC, and it's one that I continue to keep an eye on. Anyway, moving on here, we're going to keep the bank train rolling because we've got another bank here, and that's going to be US Bank Corp, ticker symbol USB, which they bought another 3.15 million shares of in the second quarter. And this isn't too fancy of a bank company, but they are usually pretty consistent at putting up some small revenue growth rates every year in the low single digits, and the same can mostly be said about their EPS growth as well. The result is that the stock has mostly been a slow mover, only climbing by around 30% in the past 5 years, and are currently trading somewhat close to record highs, although they recently had a little dip. The result of their higher revenue growth than some of its peers, though, has left them with a slightly richer valuation, as they are about even with the sector median on a PE basis and over 30% more expensive on a PEG basis. On the other hand, though, that premium price tag does at least get you a very attractive dividend that yields about 3% with a somewhat low payout ratio, a double-digit growth rate, and almost a decade of consecutive growth. So not a bad dividend stock overall, actually kind of attractive, but bank stocks in general are just kind of a little too boring for me personally, so I probably won't be buying this one in 2020, seeing as how I already own JPM, and that gives me enough exposure, just as much exposure as I'd like to have in the kind of banking industry. Okay, next up here is Delta Airlines, ticker symbol DAL, which is already a large position for them, but in the first quarter, they added another 5.37 million shares to their position, and this is obviously an airliner that has done a pretty good job of maintaining some mid-single digit revenue growth rates over the years and are expected to average double-digit EPS growth over the next 5 years as well, although 2019 is likely boosting a lot of that growth as 2020 looks dramatically lower. In any case, the stock has been really choppy and volatile over the years, probably because airliners are so sensitive to the global kind of macro economy, which has also been under a lot of pressure during this time, and the result is that they are only up by about 26% over the past 5 years, despite trading fairly close to record highs, as the overall stock market rally has likely lifted them higher. Still, there are many things to like about Delta, even at these higher levels. For starters, the air traffic kind of market will likely only grow larger over time as the world continues to globalize and become even more interconnected. And on top of that, Delta still trades for a very cheap valuation, despite the near record stock price, as they're over 60% cheaper than the sector on both a PE and PEG ratio basis. So very attractive valuation. I can definitely see why, someone like Warren Buffett, a well-known value investor, would want to be picking up more shares. And that's also not to mention that they also pay a very attractive dividend with a pretty high yield, close to 3% there, and a very good payout ratio, and also a growth rate as well. So that can kind of make it easier to hold a stock like Delta Airlines, where returns are usually low, or at least they have been in kind of recent years. Still, I am admittedly clueless to airliner stocks, and I would need to learn a lot more about the industry before I'm even thinking about making a long-term investment in one of these companies. So I probably won't be buying any shares in 2020 unless I put the hard work into learning more about their business and their competition. But I gotta admit, at this valuation and with that dividend, Delta is definitely on my radar. Okay, next up here we have a stock that I mentioned earlier in the video as the only bank stock that I actually own myself, and that is of course JP Morgan Chase, ticker symbol JPM. Well, it just so happens that Warren Buffett is also a Chase bull, as they purchased another 9.4 million shares in the first quarter. And like I said before, JPM usually sees better growth than most of its peers. In fact, they saw almost double-digit revenue growth in 2018, and that momentum has continued into 2019, where they're expected to grow by another 7%, despite already being one of the largest banks in the entire world. Now, 2020 does look like a dramatic slowdown for them, but I really think analysts are probably lowballing their estimates because of macro uncertainties. But I think that if the economy remains strong and a trade deal gets done with China that allows JPM to also enter those markets, they'll likely beat those estimates, which is something that JPM is well known for doing so, as they've had around 10% or more EPS surprise in each of the last 3 quarters. And when looking at some of their rivals, JPM will see much more growth than any of them in fiscal 2019, while other banks like Bank of America or Wells Fargo are either flat or even negative. The result is that JPM stock has soared by almost 130% over the past 5 years to now trading near record highs. But even at these higher levels, they still pay a dividend that yields over 2.6% with plenty of growth metrics to go along with it, like a low payout ratio, a high growth rate, and almost a decade of consecutive growth. And even the valuation hasn't gone to ridiculous levels yet, as they trade only slightly higher than the sector on a PEG basis, but also a little cheaper on a PE ratio basis. So in my opinion, they are fairly valued right now, but any dips in 2020 will likely be buying opportunities, as I really do think that they should be trading for a higher premium to the sector. I think JPM ultimately gives you more quality than you are even paying for. All right, and the last stock on the list here, that's going to be PNC Financial Services, ticker symbol PNC, and no surprise here, as it is yet another finance related stock, and they've picked up over 400,000 shares during the first quarter. And like many of Warren Buffett's stocks, PNC doesn't do anything too exciting, as they just offer a number of financial services to their clients and grow their sales by mid to low single digit rates every year, and the same can be pretty much said about their EPS growth as well. Now, the stock, however, has been a little volatile in the past, but likely because of the recent rallying in the market in general, the stock is currently trading near record highs and is up by over 80% in the past 5 years. And that's led to a valuation that is actually a bit higher than the sector, so I really doubt I'll be buying this stock in 2020, even though they do pay a very nice dividend that yields close to 3% with some nice growth metrics to go along with it. So I can understand why Buffett continues to hold them, but it's not really a stock that I'm very interested in myself. So there you have it, guys. Not too many stocks that I'm personally interested in myself as we make our way through 2020, except for maybe Amazon and JP Morgan Chase. But because those are already large positions in my portfolio, I probably won't be buying them unless we see significant dips throughout the year, at which case, yeah, I would actually be willing to pick up more shares. A couple other stocks on here are on my radar, but nothing that I'm overly excited about. But who cares what I think, guys? I would love to hear your thoughts down below in the comment section. Are there any stocks on this list that you either already own or that you're thinking about purchasing in 2020, maybe at current prices, or if you would like to see them dip a little, or let me know if you're just not interested in any of these stocks at all. I'd still love to hear your thoughts down in the comment section below. Anyway, thanks again for watching the video. I really appreciate all the support, and I'll catch you guys in the next one. Take care. Bye-bye.